I've been a Star Wars fan from the very beginning. Yes, I'm that old. Stick around and I'll tell you what Baby Yoda taught me about trading. Hi, this is Tim from TradingStrategyGuides.com. Congratulations, you awesome trading people. We got the likes and comments we needed to convince Casey to come up with a great option strategy for trading these stock setups. And that's pretty sweet, especially since I've got a great setup on Amazon brewing, but that would take about like $360,000 to get into. You'll be able to trade the setup with options for a whole lot less than that. We'll be sharing the option strategy and the Amazon setup with you next week. Today I'm going to tell you an important tip that I learned from Baby Yoda. Yes, you heard that right, Baby Yoda. I'm a huge Star Wars fan since the very beginning. I saw the first Star Wars film 12 times in the theater with my best friend. That was just not something people did back in 1977. Except we were huge nerds, so we did it. And we could quote the whole dialogue as well. Anyway, I'm usually the first guy in line for a new Star Wars film, but I haven't gotten to see The Last Skywalker yet. I'm sure it'll be this weekend, though. But of all the cute characters that have come from Star Wars, I think Baby Yoda may be on the top of the list. Hang around and I'll tell you what I've gleaned from him. After that, I've got a Forex setup for you this morning, a potential moving average cross setup on the Great British Pound Canadian dollar that could trigger today. I'll show you that shortly. Once again, we got a gazillion charts to look at this morning. Then later on, the trading maxim for the day. It's Friday and it's all coming at you. Remember to click the subscribe button and hit that bell so you won't miss any of these great pop culture references. Time for some chartage. This Litecoin Bitcoin pair was nice and hit our first target in one day. Then the very next day it hit the break-even stop on the second half. So I'm done with Litecoin Bitcoin for now. Nice little profit. Too bad it had to retrace all the way to our stop. I mentioned expecting a break on this silver setup on Wednesday. Well, we got the break right here. Unfortunately, it came on only 56% volume. So I'm standing aside on this one right now. The volume is still declining though, as you can see. So we may still have an opportunity, and I'm going to watch this so we can take advantage of this consolidation in some way. The US dollar Mexican peso weekly setup is moving right along. As you can see, this was my entry, and here's my target right here at 186677-ish. As I mentioned, those of you who took this as a daily setup are sitting in the catbird seat right now with profit on your first half and a continuing move down. Be sure to follow your stops on this. I'm still waiting for it to hit my first target. As I anticipated in Wednesday's video, we got our close below this bear flag right here on the Euro Swissy, but it was on 82% volume, so I'm half size on this. I sold it at 108.95. Stop loss is 109.59-ish, and the first target is 108.52. Okay, I'll show you the Great British Pound Canadian dollar setup shortly, but let's talk about Baby Yoda first. Let me start by covering the most obvious question that some of you may be asking. Who the heck is Baby Yoda? Well, for starters, Yoda is a character from the Star Wars franchise. He is very old. In the 6th episode of the saga, Return of the Jedi, he's revealed to be about 900 years old. Baby Yoda is a character in the new Disney Plus Star Wars series known as The Mandalorian. The Mandalorian takes place after the events of Episode 6 and before the events of Episode 7 of the Star Wars saga, which means our beloved Yoda character is over 900 years old, and that also means Baby Yoda is not actually the same character as the Yoda we all know and love, but he is a 50-year-old toddler of the same species as Yoda. Now, with all that out of the way, here's what I learned about trading from Baby Yoda. How many people really know anything about Baby Yoda? The fact is, after watching this video, you probably know more than 95% of the people on the internet about this character. But we're all jumping on that bandwagon, aren't we? I mean, let's face it, he's as cute as a bug, right? Yeah, that's a Southern U.S. phrase, by the way. We all love Baby Yoda, so that bandwagon is kind of okay to jump on, right? Unfortunately, I see a lot of traders doing the very same thing. They see the latest and greatest thing in trading and they can't wait to jump on that bandwagon. No testing, no studying, no true understanding of what's going on. Just this talking head on YouTube telling you how great it is, and then these people are just all over it, right? Yes, I know I'm a talking head on YouTube. Well, actually, maybe talking charts. You guys don't want to see this head. But I'm not telling you you're going to be a gazillionaire in the first 30 seconds of using my strategy, because it's not reality. You've heard me say that trading is a marathon, not a sprint. It takes time to develop the sense and confidence to be a professional trader. Mostly it takes testing your strategy so much that you are doing it in your sleep. So, take the time to understand the markets and strategies you're trading. You don't have to know everything there is to know. In fact, that just might cause analysis paralysis. But you need to understand how your markets move and how your strategies take advantage of those movements. Don't be a bandwagon jumper. Unless it's the Baby Yoda bandwagon, then that's kind of okay. All right, let's take a look at the Great British Pound Canadian Dollar trade setup. You may remember the moving average cross strategy I shared with you guys a little bit ago. I'll link the video below in case you don't remember it. The idea is that we will only buy when the 20 EMA, this purple line right here, is above the 100 SMA, like it is right here. When we have that situation like we do here, then our buy signal is a daily candle close above the 20 EMA. Well, I've been watching this as it pushed up in this nice move up right here, looking for a pullback, which we've got now, and looks like this could push on up above our 20 today or next week sometime. So here's the trade plan. We will buy a daily close above the 20 EMA. On the breaking candle, to enter a full-size position, we want to see the volume bar reach all the way up to the volume average right here. If it doesn't quite reach the average, but it does reach 75% of the average, I'll use a half-size position to reduce risk. You can calculate the percentage by taking this volume number here, dividing it by this volume average here, and you need to get at least 0.75 from that calculation. If you don't get at least 0.75, stand aside on the trade. As always, your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. So let's say this pushes up here and closes right there, and that'll be our entry. On that day, take a look at the ATR, multiply that by 1.5, and measure that below your entry, and that's where your stop loss will be. Your target will be 1 ATR above that point. If after entering the trade, we get a candle close back below the 20 down here, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above the 20 should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this with 2 positions. The first position has a stop loss and a take profit, and that position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on the Great British Pound Canadian Dollar. My intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's also my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you're always doing the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 47, leave your ego at the door. The market doesn't care. I've said it, and I'll say it again. The market is always right. Say it with me. The market is always right. So don't make excuses if you get the direction wrong. There's no way to know what the market will do in the next 5 minutes, let alone the next day or two. So get over it. You can be right or you can be wealthy. I'd rather be wealthy. And of course, this applies in your people-y relationships as well. Don't insist on being right all the time. You'll find that life is far easier when you can admit when you're wrong. It takes all the pressure off. So practice not having to be right all the time and leave your ego at the door. Remember our daily pound Canadian trade plan here. We're going to buy a daily candle close above the 20 EMA. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. Remember to click the link below to the trade management video for more details. And do sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first, and the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great weekend, and I'll see you next week.